conversation. Heritage Foods has announced acquisition of 51% stake in Getaway. The company's CEO, Srideep Kesavan, joins us now to discuss more on the same. Mr. Kesavan, good morning. Thank you so much for joining in. You have announced the acquisition of a 51% stake and will also be acquiring 20% more stake in the company. At what valuation will you be buying the remaining 20% stake and by when?
Thank you very much for having me on the show. Good morning to everyone. See, before I answer that, let me just give you a context of this acquisition. It was earlier this year that as a company, we announced our ambition to be the most admired dairy nutrition company in the country by 2030. And this goes by several objectives that we had laid down in this regard. And this acquisition is very much aligned to that. And one of the topmost reasons why we have gone in for this is that this helps us make our ice cream portfolio, which is the fourth biggest category that we are trying to build in our value-added product portfolio, a double engine for growth. And the answering specific to a question, the remaining 20% that we are trying to acquire in the month of March, what we've agreed on is a business performance linked pricing.
Got that. What's the size of the healthy dessert market right now? And I think the acquired company Getaway's revenues last year were 18 crore. Once you come on board and you scale it up with your distribution, what would the revenues look like, since you want this to bolster your overall ice cream business? I mean, what are the projections that you've made when you went ahead and made this acquisition?
Yeah, sure. See, the healthy desserts is still a very small category, but it is growing at a breakneck speed. Just to give you a sense of it, you mentioned that Getaway as a company did 18 crores of revenue in the last financial year. That's a number that they've already achieved. In fact, they've exceeded that number in the first half of this year itself. And we expect this rate of growth to continue for several years to come. At this point in time, I believe that healthy nutrition or healthy desserts category is just about 1 or 2% of the overall ice cream as a category. But this in the next 5 years could eventually become even 10% of the category. What's more important for us and what's interesting for us is that this gives us access to the new age consumers, especially the Gen Zs, who are driving consumption and who will define consumption for the next 5 years or so. It is expected that Gen Zs would be influencing about 50% of all consumption choices by FY 2030.
Mr. Kesavan, good morning. Thank you for joining in. You mentioned that this healthy desserts market could go up to 10% in size from the 1 to 2% currently. Are you seeing that kind of interest that is prompting you to make such a projection? Because for a lot of us who are fond of having desserts, we would not want to involve a healthy component in it.
See, Hormaz, thanks for asking that question. It's actually a very important one. Let's take a step back and understand this category, right? Where is this growth being driven by? There are multiple forces that are aligned here. First of all, we should understand the channel in which it is selling. Getaway is actually a major player in one of the fastest growing channel that we have today, which is quick commerce. They in fact actually have 10% of the share of ice creams within quick commerce itself, which is quite significant, right? And quick commerce as a channel is helping consumers discover many of these new trends. The second most important thing that I would like to talk about is what is special in Getaway's portfolio. Getaway's portfolio is made, all of their products are high protein and zero sugar. Now, protein is a trend that we are seeing for some time, and it is actually going to stay for quite some time to come. These are not trends that are just emerging out of the blue. We have seen this trend for the last several years in the Western world, and even in India for the last 2 years, it has been tracking. The most important aspect here is that what we really love about this business is that these people have been able to craft ice creams with a lot of love, and it is not very easy to create a high protein ice cream, low sugar, which is indulgent as well. The products themselves are heavily indulgent, which is the reason why they have one of the highest stickiness rate in these modern channels. If I could just quote some of the numbers, In quick commerce, they have repeat ratios of about 35 to 36% across all channels. In food service, such as Zomato and all, their repeat rates are as high as 45%. These are not small numbers. And also, I also spoke about the kind of growth rate that they're tracking. With these kind of numbers, we are convinced that we can win in this particular segment. If I could just also remind the viewers, it was about a year back, exactly in this channel, that we had announced a capex of 230 crores to expand and build a new greenfield facility for making ice creams for ourselves. So this acquisition, actually, which is about roughly 30% of our ice cream portfolio itself, so it not only expands our ice cream portfolio, but it complements it in every way. That is the reason why I said that this is going to be a double engine for growth as far as our ice cream portfolio is concerned.
Take that point. So it is going to complement your ice cream portfolio and will lead to growth from here on. That's about the acquisition that you're making, and will buy another 20% stake in this company as well. Generally on the business, I wanted to understand, what is the outlook on procurement prices? We have seen the sector buzzing post results. We are seeing that Milky Mist has received a SEBI nod for the IPO as well. What are the general fundamentals that you're seeing in the sector and the space right now?
The sector continues to be strong. This year we have had extensive monsoon, which was actually a small air pocket, as I would call it, in this long journey of growth. On the procurement side also, we have seen slight inflation in terms of prices. On the commodity side also, we are continuing to see a kind of inflation. In the first half, if I could just give some numbers, the milk prices were up about 6.3%. And this, in fact, impacted the bottom line of most players as well. We have seen our EBITDA come down by about 1.8% on a like-to-like, year-on-year basis. But we are confident that we are now, as we are entering the flush season, all fundamentals remain strong. On the demand side, we are seeing strong demand, except for the weather vagaries that we are seeing. And with the flush season coming in, we expect the procurement prices to cool down. And that's going to be great news for the industry.
Very interesting product, Srideep. I was just checking the website. So the Belgium chocolate ice cream, 100 ml. Calories are 106. That's less than half of what you would get in a regular ice cream. And 8 grams of protein. Must try this. Thank you very much and all the best. Wish you all the very best. That's Heritage Foods for you. We'll slip into a break. On the other side, more on the market. Stay tuned.